So you guys just let me know if you can see it.
I think you're good,
All
Phil.
right. I got a thumbs up there, so I'm good. So anyway, again, out of the Valdosta Regional Office, and I am the risk management specialist for you guys. We do have our standard screens, our non-discrimination policy within USDA and within the U.S. federal government, and so that we understand that we don't discriminate based on all those conditions. So here's our disclaimer. Basically, the presentation that we're giving is highlights features of the risk management agency programs, and it's not intended to be comprehensive. The information that we're presenting is neither, it doesn't modify, nor does it replace any of the terms and conditions of the basic policy, the crop provisions, or the county actuarial documents. If you have any questions about that, we're going to ask that you consult a crop insurance agent for additional details. But just again, for us, our agency is not what we call customer facing. You would not come into our office for anything at all. Everything's done through a representative of a private insurance company who sells the products to just like you would for your car or your home. We are the oversight portion of it. So again, for us, our beginning farmers ranchers are eligible for certain benefits that are designed to help as you start your operation. And some of those, I'll just list some of the benefits. They include an exemption from paying the administrative fee for catastrophic. That also, you heard the term catastrophic and additional or buy-up coverage policies. So normally CAT is costs you $655 per crop per county. And the additional buy-up coverage fee is $30 plus your premium cost per crop per county. But that is waived. Then there's an additional 10 percentage points of premium subsidy for additional coverage policies that have a premium subsidy. And it's just, again, it's premium. When we talk about these terms, it's just like your car or home where you have a premium that you pay. Use of so here's a good point. Let's say you're a new producer. If you're not taking over, let's say your family's farm, or you're a small producer and you're just getting started on small acreage, somewhat similar to I have like 12 acres. I'm farming alone like 2.5 that's never been farmed before. So I'm having to establish my own guidelines. But what we'll allow you to do is if you're taking over from a family member, or you're taking over from a friend, or maybe just someone that's you've met and is starting to farm with, you're allowed to use their production history. And that's important because for us to insure it, we have to know that you have some idea about what you're doing, so that you're not having, and that's to protect you as well, so that you're not having losses constantly. And so you can use that previous producer's history with their permission to establish your rates and yields and things like that on any land that you're producing. So that's the problem, the advantage of that. But anyway, so with their permission for the specific acreage that's been transferred to you, and the caveat to that is you have to have been previously involved in the decision making or physical activities of the farm that produce the crop or livestock. So if you are a hired hand, something like that, and an increase, we also give you an increase in your substitute yield adjustment, and which allows you to replace a low. So if you've established or there's low yields on the property due to uninsured cause of loss, you can now, instead of being allowed to do 60%, you're allowed to go up to 80% of the applicable transitional yield. You'll hear us referring to it as T yield. Okay. So that's a lot, but it'll kind of fall into place as we go through here. So as far as the benefit availability, you must fill out an application. It's important that you fill out the application provided by your crop insurance agent to be eligible for benefits, and the application must be completed prior to the sales closing date for the benefit to be available for that crop year. Some of those terms I wish I'd gone through, and maybe we'll do it next time to get some clarification. But the sales closing date, every crop that you may want to sell or grow has a sales closing date for insurance. And it's based on planting and the times of planting and those types of things, that as far as what the dates are. And every crop is different, but you have ready access to that in a tool that we'll talk about it in a little bit later called the Actuarial Information Browser. And you can look up any crop in our state, in your county, very specific, to find out information about it. And we'll talk about that a little bit further as we go along. As far as who's eligible, so numbers are going to be different. So this is for the risk management agency. Farm Service Agency has a different number of years, but for the risk management agency, for you to qualify for beginning farmer or rancher status, first of all, you must be an individual. And we always laugh about that. So it has to be one human, one person to qualify. In other words, if unless business entities may receive benefits only if all the people involved in that business interest are have 10% more of the substantial business interest, and they are categorized as a beginning farmer for that. Otherwise, it has to be one person. You must have actually actively operated and managed a farm or ranch anywhere with an insurable interest in any crop. I'm sorry, you must not have actively operated and managed a farm or ranch anywhere with an insurable interest in any crop or livestock for more than 5 crop years. If you're going to get a whole farm policy, that goes up to 10 years. This includes any insurable interest as an individual or as a substantial business interest holder, SBI holder. Again, 10% or more in another person who's made an insurable interest in any crop or livestock. In other words, if you farmed with your father and he gave you a portion of that land to farm, now you did that more than 5 years, you are ineligible for beginning farmer and rancher status under the risk management agency. Again, other USDA programs may have different BFR qualifications and benefits. I really don't know either way that it's dictated from DC, Washington, DC, on what programs have what qualifications. Okay, so exclusions. There are some exclusions to the eligibility requirements. And again, there is a document. If this is very confusing, there is a document that you can go read yourself, put your eyes on it, that lists that you can understand, maybe clear understanding of what the requirements are and what the exclusions are, but the exclusions that you may qualify for, let's say you may exclude a crop year's insurable interest if you were under age 18 when you were farming or ranching. So if you started at 14, 15, 16 and dad gave you a couple of acres, you can exclude those years as part of your qualification. If you were enrolled in a post-secondary studies, not to exceed 5 crop years. So if you were in the ABAC, and it doesn't matter school, any school that you were in college for undergrad or associates, undergrad, master's programs, you can count those years. Those years don't count against you as well. Or if you were on active duty in the U.S. military, those years don't count against you as well. So you can remove those if you are dual-hatted. What you were doing. So you can back those years off. They don't count towards that 5-year. And then how it works, you must apply for the beginning farmer rancher benefits by the federal crop insurance policy sales closing date. You do that through your crop insurance agent. You're required to identify any previous farming or ranching experience that you've had. You must identify any exclusionary time periods that we just talked about where you were under the age of 18 in post-secondary education or on active duty military. Crop insurance agents are familiar with and up to date on all of this information. And they're going to be the person that you go to. And if you're not sure or don't have one already, there's also another link that will help you, assist you on the Risk Management Agency website, public website, where you can find a crop insurance agent near you. They don't have to be in the same state. If you have a friend that's in another state that does crop insurance, reach out to them. But we can talk about how to get to those links as well. As far as coverage options, so for us, the 2 things that we talked about, I mentioned earlier, are catastrophic risk protection insurance. We refer to that as CAT coverage. Well, you know how we are with our acronyms in the government. And then we have buy-up coverage or additional coverage. And so we'll talk a little bit more about that. And so here's some of the specifics about CAT coverage. And Chris, if I misquote any of these things, please jump in and correct me so we don't give bad information. But crop insurance coverage options. So the CAT coverage pays 55% of the commodity price election or the projected prices applicable on losses. So if you've bought insurance where you're covering the price that you expect to receive for your commodity, it has to be greater than 55% loss. I'm sorry, 50% loss, but you're paid at 55%. If that makes sense. The key takeaway for CAT is your loss must be greater than 50% of your approved yield. So if you think you're going to get 50 bushels and you get 25, then you're at the 50% point. The good part about for CAT coverage is the entire premium is paid by the government. So it is subsidized for you as a beginning farmer. The producer pays only an administrative, we say the producer pays an administrative fee of $655 per crop per county. However, that fee is waived. That was what I was sharing with you earlier. That admin fee of $655 per crop per county is waived if you are determined to be a beginning farmer rancher or a veteran farmer rancher or a limited resource farmer and rancher as well. So 3 categories. And you can be more than one category. You can be a beginning farmer and a veteran farmer. You can be a veteran farmer and a limited resource farmer. All those apply. And so the only disadvantage from the catastrophic coverage is that there are no replant payments that get paid under CAT. So if you have a loss, you're going to be paid for the loss, but we're not going to pay you to replant. But again, the fixed 655 is waived. So buy-up coverage is our other option. It's offered again through the private insurance companies, and it's underwritten by the risk management agency. So that includes all coverage level options greater than CAT coverage. So CAT coverage is that 50% I was telling you. So anything greater than 50% becomes what we call buy-up or additional coverage. And then that goes from 50 actually to 85 up. You can get some endorsements that'll take you to 100. But includes all levels of coverage greater than CAT. They select the amount from 50 to 75 or up to 85 based on the crop, and that's for your yield protection portion. Producer selects the percent of RMA price to insure, which is 60 to 100% for revenue protection. So it's 85 for up to 85 for yields and up to 100% for revenue. And part of the premium is paid by the government, so it's subsidized, and the producer does not pay. You don't pay. There's a $30 admin fee per crop per county. You don't pay that fee as well.
Hey, Phil.
Yes, sir.
Just one thing.
Yeah.
With those endorsements, it can't get you to 100%. It actually, the most it can be is 95%.
95. Okay, thank you. So you got some skin in the game, whether they want it or not, right?
Yeah, that's actually from the Farm Bill. Like it cannot be more than all of the stuff added together cannot be more than 95%.
Okay, wonderful. Thank you, Chris. Appreciate it. So the crop insurance subsidy, we talked about subsidies. And so the coverage level. So this is an example of coverage level. So this would be your buy-up portion. So there's the 50 up to 85%. I don't even know what crop this is. It doesn't really matter. They're all going to look the same. And then along the left side is your unit. So however you have your farm broken up, basic unit is that it's just basic. The way that's defined, and those are all terms that you'll have to discuss with your agent and figure out how you want to lay out your farm. But anyway, this gives you then what the subsidies are. For example, if you decide you want to do 75% coverage, if you're on a basic unit, it's subsidized 55%. Okay. Again, it's dependent upon the unit type that you select. And oh, by the way, not all options are available for all crops. So those units vary by crop. And the level of coverage, 50 to 85, you select that. notice that as you increase the level of coverage, the subsidy decreases. The subsidy decreases. So the more risk that you're putting on the government, the more you're going to have to pay, if that makes sense to you. Okay, so the crop insurance, here's an example. I tried to think of one that we could do, but so Producer Smith has a corn policy in Georgia, and he's using basic units, and he wants his base premium is $100 for that coverage, and he has a 75% coverage level. So the premium subsidy for a 75% coverage level is 55, and that goes right back to, let me go backwards here. So 75, 55, we discussed that. Okay, so because he is a beginning farmer rancher, so you get an additional premium subsidy reduction of 10%. So that means instead of being 55, it's 65. So you take your 100% base premium, which is what it would cost for your coverage. You get 65% subsidy rate, so that's $65. And so the premium subsidy is applied to the base. So you take the $100 that you owe, you subtract the subsidy that the government's paying. That means you pay the difference of 35. Okay. So that's your portion, $35 out of 100. So the government is picking up this portion of the bill, the $65 portion of the bill. Okay. That portion's simple. Again, it can get technical, and so that's why the agents are there to help you with all that stuff. So there's numerous types of insurance plans and policies available. They're just a plethora of them out there. But I wanted to list a few here on the screen, and then go into a little more information about what's available to you. But you can do actual production history. You can do actual revenue history. We have what they call a dollar amount or a dollar plan. We have different types of livestock insurance plans. We've got dairy revenue protection. So if you're doing dairy, we have livestock if you're producing cattle. And they have livestock risk protection. One's gross margin and one's risk. And those are on it's cows, swine, and I think it's goats. It might be sheep. So anyway, I know cows and hogs for sure. We have a margin protection plan. We also have some folks that are doing hay. If you're doing bees, apiculture, pasture range and forage, if you're grazing your cattle, we have a rainfall index plan that you can get to protect you for lack of rain. It's not a drought insurance, it's lack of rain. We have revenue protection policies. There's yield protection policies, and then we also have whole farm and micro farm. And I'm guessing that majority of you, the micro farm would probably be the most applicable to you, especially if you're diversified. And Chris will talk about that a little more. And so that's the end of my portion. Turn it over to Chris now, and he'll walk you through the next portion that we have, and then we'll take any questions. And if for some reason we don't have the answer right away, we will get your information and send the response back through Seth so that he can share that with everybody in case others have the same question. So Chris, I'll let you take it now, bud.
All right, thanks, Phil. And if everybody could just bear with me a second, I will share my screen, get to, all right, share. Okay, can everybody see that?
Yes.
All right, well, hello everybody again. Just as a refresher, in case you weren't here for the first few seconds, my name is Chris Rutland. I'm also a risk management specialist in the Valdosta office. I work along with Phil, and I am the office SME for whole farm revenue protection and micro farm, which are two of the programs that the last two programs that Phil just highlighted on his previous slide. So I'll actually just say a couple more things about this. So all of these plans that you see here, they're either specific to the crop or some of them apply to some crops and not to other crops. It's all kind of just depending on the characteristics of that program. But I will say most of them that you see here are specific to a crop. So, cotton and peanuts and corn may all have revenue protection policies, but you are going to be insuring your cotton and peanuts and corn separately under that revenue protection plan of insurance. The last two, though, are kind of unique among risk management agency or FCIC insurance programs because they actually cover the revenue from all of the commodities that you produce on the farm added together. So it's revenue. That's one piece that's a little bit different than a lot of our other programs, and also that it's all added together. And that's why Phil mentioned, those programs are really targeted at diversified producers. And so some of the things that Phil went through are very general crop insurance principles, and they will apply, and to these two programs, and some of the things that he talked about won't apply. But I'm just going to give you today a very high level overview of this microfarm insurance program, because as Phil said, it might be the most applicable. But again, talk to a crop insurance agent and they will, take a look at your individual operation and help you decide what's the best crop insurance options to fit your risk management needs. But specifically, this microfarm program is, as I said, it covers the revenue from everything produced on the farm, all kind of in one pot. And it's just like whole farm in that respect. The difference with whole farm, the programs are similar, but whole farm revenue is designed for, or I guess I should say, micro farm is more targeted towards smaller farms, and it has fewer records requirements and simpler records requirements. But the trade-off is that the eligibility is capped to farms with $350,000 or less of approved revenue in the first year and $400,000 in the second and following years. But they are available in all counties in all states in the United States. So I'll talk a little bit about what is covered under microfarm. So it covers the revenue produced, and I do the produced in air quotes for what I'll explain in a minute, but it's all the revenue produced on the farm in the insurance period. And so that includes actual commodities that you produce on the farm, agricultural commodities. It also can include some post-production and kind of value-added operations, not all, but like, for instance, canning or freezing might be allowable revenue. It also includes commodities. They have to be agricultural commodities, but it includes commodities purchased for resale on the farm as long as that doesn't make up more than 50% of your total revenue. And I will say it does not cover a few things, and I'll go over that now. So microfarm does not cover revenue from timber or forest products, also from animals for like sport or show animals or pets. And it also does not cover revenue from non-commodity sources. So like, let's say you have a farm stand and you sell commodities from your farm at that farm stand, but you also sell, say, souvenirs or bottled water or arts and crafts, things like that. None of that would be covered, those non-commodity things. So again, this is a very high level overview of how the program would work. For the details, of course, you would need to talk to a crop insurance agent, and I'll hit on that again in a minute. But the basic idea is that microfarm uses your individual tax records, and also a form that we call the farm operation report to establish an approved revenue. And that's one of those terms. I'll define it. But an approved revenue is essentially your historical average revenue on the farm. And remember, that's the number that can't be more than $350,000 in the first year, $400,000 in the second year. And I'll pause here actually because that's an eligibility requirement and it's related to what we're talking about. And also another eligibility requirement that is related to that is you need a minimum of 3 consecutive years of tax records to be eligible. But yeah, so we take that approved revenue and we multiply that times the coverage level that you selected, right? And that was what Phil was talking about, the 50 to 85%. And I mean, I can hit on that for a little bit more. You can think about that as customizing the coverage. So like if you were, say, like health insurance. So if you're shopping for health insurance, you may have kind of very low deductible plans that are kind of Cadillac insurance. So if you select your coverage level, you can think about that as kind of selecting a deductible. So if you select a low coverage level, 50%, say, you're going to have a much bigger deductible. So that you can think about that as analogous to your high deductible health insurance plan. Whereas if you pick that 85% coverage level, you can think about that as kind of a Cadillac health insurance plan. So of course it's going to be more expensive, but the deductible is lower. But for micro farm, those coverage levels range from 50 to 85%, 5% increments. And so you select that coverage level, that's multiplied times that approved revenue, and that is what we call the insured revenue. Then from there, it's simple. If the if the insured revenue, I'm getting tongue-tied here. If at the end of the year, the actual revenue that you have on the farm, all added together, is less than the insured revenue, which is that approved revenue times the coverage level, then an indemnity is paid, and the indemnity is the difference times your share. So that concludes, again, the very high-level overview of the program. Of course, it's more nuanced than that, and you'll need to talk to a crop insurance agent to figure out what exactly is the best fit for your risk management needs. But now I will highlight a couple of important dates because, as you can kind of tell, there's a lot of moving pieces to these insurance programs, even for micro farm, which is designed to be kind of simple. So you don't want to put this off. If this coverage is something that interests you, definitely talk to a crop insurance agent with enough time before that deadline, which I'll cover in a second, to give yourself time to get all the records and the requirements together. But so the 2 dates I'm going to highlight for you today, you can see them on the screen here. The first one is the sales closing date, and that is the deadline to apply for the insurance coverage. So that's when you with the help of your crop insurance agent, will actually turn in the application for crop insurance. So all of the documentation, the tax records, the farm operation report, all that's got to be completed by that sales closing date. Now for Clark County, Georgia, and all Georgia counties, the sales closing date for micro farm, and as Phil pointed out, this is specific to the crop. So other crops, if you want to do another insurance program like an individual policy like corn or peanuts or something like that, that may have a different sales closing date. In fact, corn and peanuts, I can tell you off the top of my head, it's February 28th. But for micro farm, the sales closing date for calendar year filers and early fiscal year filers, and that's your tax filing status, that's going to be March 31st for all Georgia counties. The acreage reporting date, which is the date that you have to submit that final farm operation report. So the one that you submit by the sales closing date when you apply, that's an intended farm operation report, right? So because on March 31st, you may not know exactly what you're going to have on your farm that year, of course, right? Because you're still, for the spring crops, you're still planting, or may not even have started planting yet on March 31st. So you file an intended farm operation report with the application. By July 15th, which is the acreage reporting date, and that doesn't change based on your filer status. That's July 15th for everybody. That's the date that you submit that revised farm operation report, which is essentially the final version. So March 31st, July 15th, if you happen to be a late fiscal year filer, for 2024, the deadline unfortunately has already passed because it was November 20th. But you would, by November 20th, you would want to, well, I guess we're in May now, so the deadline's passed for everybody. But for next year, you have an earlier deadline. So it would be November 20th. So again, I'll just highlight, if this insurance or crop insurance in general is interesting to you and you think you might want to use it to help you manage your crop risk, production risk, don't put it off until the last minute to get in touch with a crop insurance agent. That's something to do sooner rather than later. And to that end, RMA has a neat tool that Phil referenced a few minutes ago on our website, and I have a screenshot here. So this is our www.rma.usda.gov. And that yellow arrow that you see there, that's pointing to the tools menu. And under that tools menu, there's an agent locator tool. I think it's the second from the left icon. If you click on that, you'll be able to enter a city or a zip code or a county, and it will return all of the crop insurance agents and their contact information within a certain radius of that geographic point. And also, just next to that, I'll highlight that the actuarial information browser, it can also be accessed from this website, and it's actually the very next icon to the right from the agent locator tool. So on that actuarial information browser, you can look up specific to your county, basically all of the information for any crop insurance program that we administer. So you'll select the year, which would be at this point would be 2025. And then you select the crop and the plan and the state and the county, and it will give you all of the dates, the rate, the premium rates, the special provisions, all of the actuarial information for the offer in that county can be accessed on that website. And more information, rma.usda.gov. Again, you can see that menu there. And I made a note here. If you forget this website, rma.usda.gov, you can Google search USDA RMA, and that will, or Bing or Edge or whatever you use, and usually that'll be the first website that comes up. So these are some additional resources that all of them are accessible from our homepage, but in a second, I'll post those links in the chat. But these are basically one-page summaries for the microfarm program that I highlighted today, also whole farm that I kind of referenced. And then these are actually the links to the provisions. These are kind of nitty-gritty and in-depth, but they're there for you if you want to read them. And with that, that concludes my prepared remarks. And so I think we can open it up for questions. I know we covered a lot in just a very short amount of time. So if you any questions, let us know, and we'll see what we can do to answer them.
Chris, can you back up like 2 slides, please, to our RMA website? There we go, right there. If you guys will notice as well on that, there's also the beginning farmer link, and that if you click on that, that opens up just a wealth of information for beginning farmers and ranchers, all kinds of data there. And again, you can do state specific, but it gives you names of individuals within, like I was speaking to you earlier about the champions and the coordinator. Unfortunately, I don't think Neil Leonard was the coordinator for the state of Georgia. Neil has retired after about 40 plus years of service to USDA. And I don't know if we've made a selection for the coordinator, but I'm sure if you reach out, someone will get back to you but you can also reach out to the champions. They should be listed there as well. But if you have any questions, just reach out to me. Thank you, Chris.
All right. Thank you, Phil, and thank you, Chris. If anybody has any questions, I just invite you to unmute and ask away. We'll stick around here for a few more minutes. Or you can drop a question in the chat and I can read it. I guess I had one quick question. Chris, when you were talking about the 350,000 and the 400,000 number, is that the farm's total revenue, or is that just the insured revenue?
That is the farm's, well, it's actually the allowable revenue. So if you're, let's say, I don't know, let's say you had $355,000 worth of revenue from the farm. If $5,000 of that was sales of souvenirs and bottled water, then you would still be eligible. But it's the total, assuming that you don't have any of those kinds of sales, it's the total revenue from the farm operation.
Gotcha. Okay.
And I meant to say this on that slide, but the cap only applies to micro farm. So there's a similar program called whole farm revenue protection, and it's just a little more complicated. And if your revenue is too high for the micro farm program, you may be eligible for whole farm revenue protection, which there is also a cap for that one, but it's really high. I mean, I think it's like $17 million.
Okay.
So yeah, there's a long way from 350 to 17 million.
Okay. And then I had one additional question for Phil. Phil, when you were talking about the being able to use the production history from a previous operation that you might have taken over, does that, if you use that production history, does that count against your years at your 5 years or your 10 years, depending on
those circumstances? So if you were over age 18 and you participated and you had more than 10% share in that, then yes, that counts towards a portion of those years.
I got you.
If you were under 18, military service, in college, any of those things, or less than 10%, then it would not count against you at all.
Oh, okay. Great.
And I was going to say also, and Chris and I, we didn't put it in those slides because it's really, really new and we're still learning it as well. But we do have, for those of you who are considering greenhouses or high tunnels, those types of things, we do have a controlled environment policy that just came out, and we need to learn more about it. But it is something that's available. You can talk to your crop insurance agent about it. So if you're growing in a greenhouse, if you're doing, I don't know if it covers like hydroponics. I have to learn that too. But if you're doing hydroponic production or something like that, we need to check and see. But I just know that there is a controlled environment policy that literally just came out. So that's why we're not really familiar with it. And I didn't want to share until I get a little more knowledge about it. But your crop insurance agent will have that information for you.
Okay, great. It's good to know.
Also, nursery, I was just going to share things like if you're starting at, let's say, a nursery, we have coverage for nursery type things if folks are interested in doing nursery. So I'd be curious to know what some of your folks are looking at as far as what they're wanting to grow. And so that may help us if we, in the future, if we need to do more presentations that we target more specifically. That would be awesome to get us as well as far as who's growing water, what they're thinking about. That would be awesome.
Yeah, I know that a lot of the folks that we with Athens Land Trust are working with are I think that you're right on with the micro farm and the whole farm. A lot of diversified production, be that livestock and vegetables, or a mixed vegetable operation or, fruit and some kind of value added product. So, but I have recently talked we had a grower ask about ensuring high tunnels, so
Okay.
production through high tunnels. So that's good to know that that's out there.
Absolutely. Yeah, please make sure that they check into that. Again, I'm going to be delving in. I have a high tunnel myself. I do citrus production. I have 2.5 acres of citrus trees that are in starting year 3. And then I also have high tunnel that I'm still trying to figure out how to grow in there, to be honest with you. I haven't perfected that yet, but it's good to know that policy's out there. So.
Hey, great. Any other questions for Phil and Chris? If not, I will thank you all again for joining us, and thank you everybody for logging on. If you have questions for Phil or Chris, they've put their contact info, and I can share that as well, where you can reach out to me and I can facilitate connection there too.
Yes, Seth, and I don't know if you're doing any post evaluations, but we'd love any information you could have that's just help us to do better and present better as well. We're not proud. We'll take any suggestions, any comments, anything like that. We're really here for you guys. That's our sole purpose is to help as much as we can, and so it really, really, really appreciate positive or negative feedback is appreciated. Our feelings don't get hurt. It just makes us better presenters, better subject matter experts on what we do. So anything like that, we would really appreciate.
Okay. All right. Sounds good. Okay. Well, we appreciate it. And everybody have a good rest of your Thursday.
Thank you. Appreciate it so much.
All right.
Appreciate y'all.
Yeah. Thank you.
Mm-hmm.